Hello, Warriors. Hello, Face, ForexAnalytix Community Experience. Hope you had a great experience with Turnaround Tuesday. Hope many of you were able to take advantage of that. Everyone doing okay? I hear someone's mic. It's probably Blake. How are you, buddy?
Good. I just actually popped in a little late, so if you said anything, I missed it.
I could hear you. I just said hello and welcoming everyone. Hope they had a good day yesterday. I haven't said anything about the markets yet, but
Cool.
Just want to go over a few things I talked about this week, and I hope it helps some people. Yesterday, I was looking for a turn in the yen, which a correlation gave me a buy that gold could pop. So this was a turnaround Tuesday candidate that worked. So if you took the trade, I'd be taking minimum half off now. My objective was to exploit the market between now and reset day on Friday. So Friday we'll either have an acceleration of what's starting or some type of reset here. So nothing wrong with taking $8-10 out of gold and maybe dropping your stop, even a profit stop for a few bucks, or nothing wrong with going to the door either. It was a decent trade. So the sister pair to that was the Japanese yen, following through pretty good to the downside in the end. Talked about it up here, so I know I sound like a broken record, but if you were short from 113 or so, that's where we were yesterday. You have a nice trade. I think there is potential down the road for it to trade down towards 110.5 down here. But you never know with NFP, right? So you caught a nice little wave. Nothing wrong with going to the door. It could accelerate if we get risk off, and if we may get risk off. We finally went to Steve's target in the S&Ps yesterday. They're down a little bit today. So that was a gold, that was a yen. But I actually started off the week talking about commodity currencies, and Aussie was a candidate for Turnaround Tuesday as well, and maybe not as big of a payoff, but I started off showing the weekly here in Aussie. This is your 4-hour. But yesterday I showed the 3 drive. Okay, so we had some confluence. We had a 3 drive here, 1, 2, 3, take a picture. But what really had me looking for that buy before I started to get shorter term non-confirmations was the weekly in Aussie that we were testing the breakout. So we've pulled back to the breakout, and we're trying to put in a reversal week to the upside. Nick, in her commentary yesterday, said that we were going to be good or bad. I interrupted her, and then later on she said, yeah. I said, well, we probably won't know till Friday. And so anyway, decent little pop there in Aussie. I would do the same thing. Okay, I would do the same thing here. Take half or book it. It should not turn into a loser. Once you have over a 50 pip lead, you should never have a losing trade. You should get paid on part and then trail your stop, because if it gets back to your entry, Mr. Market's not trying to make it convenient for you to re-enter at the same price, in my opinion. Okay, so then we also talked about Canada. And Canada, similar situation as well. Yesterday was Turnaround Tuesday. We're actually getting, what's this, the weekly, we're getting a reversal week to the downside, but everything could change on the NFP. But we had a 3 driver here too. So sometimes you'll start getting patterns that'll start showing up across the board. It could be a 3 driver, it could be wedges are showing up everywhere. Head and shoulders patterns are showing up everywhere. So anyway, this was a pretty good scalp too, right? Say you're short from 520. It's not a big trip to Hollywood, but I'll take 70 pips every day. So I believe that's about it. The S&P was the only thing that didn't turn, and maybe that's going to start turning today or Friday. Steve, great call on his 1.618 target in the S&P at 25.35. And you know what? When Steve says he's going to do something, he does it. So although I lost a Coke to him on this bet, I would bet anyone in the room a Coke that he's in there. So Luca has some Kashkari's talking today. Okay. So that's a wrap. Everyone with me on my analysis, and if you took some of those ideas seriously, how to manage the trade from here. Okay, and you know, if you're doing it, if you want to manage a trade, something else I teach is, say for example, you put the trade on using an hourly or 30-minute, and sometimes people even drill down to 15 for entries. Manage the trade from a longer time frame. Manage the trade from a 4-hour, or if you want to turn it into a position trade, manage it from a daily. And then the short-term stuff that you'll see you could avoid when you're watching an hourly chart will just become noise, and it'll be easier for you to sit. Give me a Y if you know that. Give it a try. So try and manage your trades from a longer-term TF than where you put it on. Yeah, I think you'll like the results. Okay, so we have Corbin Cordilla today. And Corbin's going to be our guest today. He has a course, FX Master course. The guy's been around a long time. Bando, how are you? So should be a good interview. I've asked him not just to pitch his course, but to show us how what he teaches could be actionable. So we'll see how that goes later on in the day. And we have a full crew in here today. I see 6 in the staff room. So Blake, it's you're on deck.
All right, Dale. Yeah, good morning.
How are you, buddy?
Good. Okay, so you said something about, and I 100% agree with you. So you said something about, why don't you take a look at whatever trade you're doing from a longer term time frame. I really try to look at my trades as, okay, I'm gonna get long, you know, like let's say I'm gonna get long the euro. You know, yeah. I try to look at that euro and say, okay, can this trade from here evolve into like a swing or position trade? Is it possible? And then go from there, and then try to micro time my entry on a 15-minute chart or an hourly chart or whatever I'm using. But cool. Yeah, that's a great.
And then if you're in, Blake, you'll move to like a 4-hour daily to manage it, so you don't see all the wiggles.
Well, not necessarily, but yes. I mean, I just want to. Like usually what happens is I might look at the euro dollar and say, okay, well, I would like to buy the euro dollar here. I'm just using that as an example. I'm not saying I'm not long the euro, by the way, but okay. I'd like to buy the euro dollar, and I think if I picked it up here, I could hold it for a few days. Then, from an intraday perspective, I'll take, I'll find a better entry and try to get myself in. And I'm not. Believe me, I'm not the best timer in the world. people seem to think that like I'm some like awesome market. I mean, I know guys and gals that are like really, really good. I'm more. Yeah,
they're pissed if they miss their entry by 3 pips.
Yeah.
I got 3 better. I know those guys.
I know. I mean,
I'm wondering where am I going to have to scale in after my initial entry?
Yeah, I do scale in a little bit, and I do that quite a bit actually, and I'm looking at more of a swing type of strategy when I'm getting in the market, but at the same time, I'm also going to try to get myself in at a better price from an intraday perspective. But if my trade by the end of the day hasn't really worked out in my favor, then I'll have to take a look at that longer term 4-hour or daily chart and see if it really if the candlesticks still line up with what I'm trying to do, or if the position still makes sense, and then go from there. So but I think it will help you a lot if you start off your analysis process with a longer term point of view. Excuse me. with a longer term point of view, and then narrow it down. And that's one of the things when I did the morning edge webinar for 14 years or whatever, however many years I did it. I'm 14, 10, 12, 14 years, somewhere in that neighborhood. I always started off the analysis with, okay, let's start with the long-term charts, and then we call it drilling down the charts. So I start with a long-term chart,
Right.
Like a weekly chart, then go to a daily, and then go to a then go to an hourly, and then then that helps me as a trader micro time my analysis. So to give you like a working example, let me go over and grab the charts really quick. So like for example, I bought hold on really quick, that's funny. Oh, hold on one second. So I'm short the U.S. dollar Swiss franc, right? Okay, this will give you an example of like a position I'm in. All right, so why did I short the U.S. dollar Swiss franc? Well,
it's a pip too, isn't it?
It is a pattern in play, yeah. So if you look here, it's a pattern in play from yesterday. All right, so the reason why I shorted the dollar Swiss is if you look at longer term, like this is a daily chart. This is moved out a bit. All right, first of all, let's take this. See this trend line here? See that one? I'm moving it. Okay. Yeah. So that long-term trend line that was broken. You could say back here. Back here. Yeah, it broke. Back in May. All right. Since then, we've been in this range. Right. So if you take the range and it goes basically from 98 cents down to 94.50. We're at the upper end of our range. And yesterday we so zooming in. You notice how I'm zooming in. Now zooming in. We had a shooting star yesterday. All right, so get rid of this. You can see the shooting star candle from yesterday. I'll take away today's candle, but this is a shooting star. Okay, and what it did is it posted a false breakout above the resistance. Right.
Cool.
So stopped out. It did a Forex stop hunter. Yeah. Did a Dale Pinkert. Stopped out a lot of shorts. Got some people long. And then now
you know what, Blake, while you're there, don't put your stop 2 pips over a swing high. Put your stops at least 30 pips, because there are stop hunts. And if you have your stop over a high with everyone else, people say, Dale, how do you know where the stops are? I say, well, pretend you're short. Where would you put your buy stop? And they would tell me over that high. I go, well, that's where everyone else's is. Don't put yours there.
Exactly. So you want it to be fairly liberal, especially if you're looking at like a swing, swing.
Yeah, let it breathe, right, bro?
Right, exactly. Especially if you think you got the positioning right. So in this example, I know that there's been a lot of traders getting now. You think about it from like a longer term perspective, okay? So what has been the big mover? And you and I have talked about this a lot over the last 2 weeks. What's the biggest mover for the dollar rally? What is the biggest? What is the number one? Bond market. Okay, so you talk about the bond market and you go, okay, well, the bond market has been beat up. You can see the bond market has come down. Now, yesterday, really interesting. What?
You showed it yesterday that it could be at support for a bounce.
Well, yeah, support for a bounce, and JP Morgan's clients were the most short since 2006. And, there's a lot, and it's like we were getting, we weren't quite oversold, but we were near some support. Everybody's bearish bonds, and that means that in essence everybody is bullish the dollar, because if bonds have been dropping, yields have been rallying, and if there's a rally in yields, it usually represents a rally in the dollar. So I knew that, okay, we going back to the dollar Swiss, we're at channel highs. We had a false breakout. We're in breakdown territory longer term anyway. Then you've got this false breakout, and you've got the fact that the bond market could start to bounce a little bit, okay? And we just had our ADP numbers, by the way.
Yeah.
And it's in line with the expectations, just so you all know. That here, let's go over to the dollar yen. I should have
Not a big move.
No. I should have been covering this as it was coming out. So you see the ADP, we had a little spike up. You know what's actually scary about that is that we have this this move up in ADP. ADP, and you can correct me if I'm wrong. ADP has been outpacing, has been really leading us to believe that the jobs reports are going to be stronger. And you know, we keep getting these beats in ADP, which leads us to a better number in non-farm payroll. And here, I'll actually back up that sentiment here really quick. So if you take ADP, we've had ADP that have really come in quite strong. Now, you know, 2 months ago we had a little bit of a miss, but you know, basically we've seen the strength in ADP, which has led us to believe that that the jobs reports. Here, let's go over to the jobs reports here. Are, you know, generally speaking, gonna beat expectations. Now, if ADP is coming in line, that poses a risk that we're going to have a lower number. Now, you can see our expectations this month are already going to be lower due to storms and whatnot. But could it actually could we actually have a negative jobs report? Is it possible? Is it possible we only create 15,000 jobs versus 80,000 jobs? You know, if ADP is not spanking the heck out of the number today, you know, we came in, you know, basically in line. Okay, you know, we could have a jobs report that's not particularly great. But anyway, that's neither here nor there. That's something we'll have to deal with here in, you know, a few days. But going back to the dollar Swiss, I guess what the point I was trying to make here is that you know, just factoring all that in together, you know, bonds look like they're going to bounce. The dollar looks like it's going to pull back. We had a false breakout here. Then you throw on top of it a little bit of risk aversion. I say risk aversion because the S&P did hit, you know, Steve's target at the 161% extension here, and Steve will tell you guys a little bit later. He's now starting to short the stock market. But regardless, we have, you know, if we have the stock market roll over a little bit, some of the currencies that tend to be outperforming in a stock market pulling back, you know, if we get a couple of days of a pullback here, will be the Swiss franc and the yen. So, you know, I think all of this really feeds into the idea that you have a dollar Swiss that could possibly break lower. So as you can see, I started off with a longer term view, and then I work my way into more of a near term view, and then I factor in all of the other pieces of the pie that can help you know, my trade move in the direction that I'm anticipating, and that's how I do my analysis. It's not, and maybe it gives you guys and gals a little bit clearer picture of, you know, okay, I'm not just looking at technicals. Okay, I'm not just looking at a 15-minute chart. Okay, I'm actually staring at a longer term viewpoint and seeing if, you know, I can get all of these probabilities working into my favor, and that's what it all boils down to. So there you go. I'm done. I'm gonna go home now.
You do it, I do. Abruptly, you're imitating me.
No,
I'm done. Someone else talk for a while.
I didn't do that. But anyway, no. Let's speaking of which, let's take a look at a few other things. I mean, you know, speaking of like a longer term viewpoint, you know, here we've got the euro dollar. You know, the euro dollar. I have to tell you guys, you know, people are looking at the euro dollar saying, oh my God, you know, here we go, we've got this pullback, and you know, it can drop so much further from here. I'll tell you, since the lows that were created in December of 2016 to the high that was created, you know, this last month, in September, we've only retraced 24%. So in my opinion, okay, in my opinion, the fact that we've only retraced 24%, that says a lot. That says a lot based on how little of a pullback that we've had. And I always like to tell people, this: if you get such a shallow retracement in the market, there is a strong possibility that we're going to get a big continuation. So in other words, what if you get especially on a big move like this? I mean, whoa, I didn't want to do that, but I'll just put that back wherever I had it. Okay, so if you have a big move like this and the pullback is only to a 24% retracement, the chances of a continuation move, if we break out and we start doing this again, the chances of us going up here are are really quite high. Okay, the more shallow the pullback, the more explosive the move can be, any which way you're going. So if you're going up, then if you're going higher, shallow pullback means that we're probably going to get an explosive move up. That means if we don't pull back much further than, especially like this 38% retracement. I mean, how many people are shorting the euro up here against all odds, and how many people are going low in the dollar just trying to pick it up down here while it's quote unquote cheap? I think the risk is that we get a big move higher, especially following non-farm payroll. If for some reason we're trading back above 118.50, which it's about 75 pips away from where we're at, we trade back above 118.50. I mean, the risk is that we blast through new highs in the coming weeks ahead, and I wouldn't want to be long the dollar in that situation, not at all. Does that make sense?
Yeah.
Okay. So
yeah.
Longer term look in the euro dollar, the pound. I tweeted about it, so I'll talk about it here. So we had services PMI come in a little bit better than expected. The pound, just so you all know, I'm trying to establish a small long position down here, because what I believe is eventually going to happen, which I don't know if this is the week that it's going to do it, but what I believe is eventually going to happen is we're going to take out this 136.50 level. This is a multi-year post-Brexit, pre-Brexit, post-Brexit trend line. So it takes us all the way back to the highs back in 2014, and I believe that this trend line will eventually be taken out to the upside. I'm in the same camp as Stelios. And he believes the pound is probably mispriced down here, and inflation is going to be a little stronger, and the Bank of England is going to have to be a little bit more aggressive with monetary policy. So I think this eventually gets taken out. Now, whether or not,
don't fade Macro Man on his big picture stuff. I'll tell you that.
Yeah, you don't want to fade Stelios. But the fact of the matter is that I don't know if this is going to be the place to buy it. I mean, I'm buying a little bit down here, but I don't know if this is going to hold. I mean, we may end up going a little further to 131 before bouncing. That's more dependent on what happens with the Fed Fed. That's more based on what happens with the non-farm payroll versus anything else. I mean, we're really going to have to see a fairly weak non-farm payroll, or a weak response to non-farm payroll in order for the pound to rally. That would be my best guesstimate. Is we're going to have to see some dollar weakness in order for this to really pivot here. And it's a little too early to say, but we are near this trend line, and we've got the 50% retracement that's right there. So the pound, the possibility of us bouncing here, I still think is pretty good. Let's see, as I pointed out with Steve, or with the S&P, as Steve talked, and I'll let him talk about it a little bit more in depth here. But yeah, we hit the 161% extension with the S&P. And that's it is a big deal because the S&P is so overbought. I mean, we're overbought and we're divergent too. So, which is, you know, I know we've been divergent like this for months on end, but you know, the S&P is, you know, at a place where, you know, we could probably start seeing a relatively decent pullback. The dollar index, the dollar index, a little bit of a risk here with the dollar index is that we had broken this downtrend line. You can see this downtrend line here. This is longer term. We broke this downtrend line, and now we're at risk of coming back below the trend line, which, you know, after, you know, hitting some, you know, this is all pretty big resistance zone through here. Matter of fact, I'll redraw this a little bit here. Let me grab a. Yeah, you can do something like this. It's like a resistance zone for the dollar index all through here, and I gave it a little bit of leeway because you can see through here it's also, you know, good resistance. So if the dollar index dips back below this trend line, that's gonna bum out a lot of people because you got so many people that were, you know, getting long the dollar based on the bond move. You know, everybody's expecting the bond market to go down. Everybody's bearish bonds. You know, if bonds start to bounce and yields drop, you know, the dollar index is going to come under pressure. So, you know, the risk here is that the dollar index starts to come back below this this trend line, and I think that's gonna, you know, like I said, it's gonna bum out a few dollar longs out there. One last thing I want to point out is the Aussie New Zealand. I picked up some of this overnight. We came out of a wedge here. Here, let me get rid of this. That's actually a 38% retracement. You can see it right here. So you can see the 38% retracement around 108.50. We came out of a wedge, and it looks constructive. Now, you know, longer term, you know, the longer term, here's the Aussie New Zealand. You know, we've got a very big triangle, and I don't know if we're going to break out of this triangle yet. Like I don't know if there's a catalyst that's going to really drive us higher at this point. I still think we can, you know, make our way up to 111, but you know, the apex of this triangle may have to build out some more. It just may have to. So, but it's something that I think it's worth keeping an eye on, especially with New Zealand's government trying to pull together some sort of correlation. If they're not coalition, I say correlation, coalition, and if they're not successful in doing that, that could weigh on the Kiwi a little bit more than other currencies, especially the Aussie. So that's something that I think you guys should keep an eye on as well. I think this Aussie New Zealand can make its, you know, can drift back up towards the upper end of this triangle, if not break out. So that's I'm playing into that as well, you know, longer term. But I think that's all I really wanted to say this morning. I think, Steve, are you here?
Who's that?
Hey, good morning, Steve. How are you doing?
Hey, hello, mate. I'm good. How have you been?
Good, good. I hear you're getting short some S&Ps up there.
Yeah, finally got triggered. I was looking for 2,350 since we were actually triggered.
Your volume's pretty low, Steve.
Okay, give me a second.
When Steve says he's going to do something and he waits for it to happen, he doesn't. He goes ahead. He's really, Blake, isn't he one of the more disciplined traders you've come across?
He's definitely disciplined. He's definitely disciplined. Yeah.
Amazing. You know, I mean, there's no emotions in his trade.
No, he trades once every 4.5 years, but he is very
Just kidding. A little more active than that, I think. But, yeah, I know what you're saying.
5.5.
Yeah, I think you're talking about Stelios.
Yeah, no, that is Stelios, actually.
And he's even more active than that. But yeah. All right, Nostrovolgi.
So what's happening?
Top picking the S&P.
To call it a top picking, we first need to see it top, right? Until then, I just.
I owe you a Coke. I owe you a Coke, buddy.
Yeah, I didn't have much doubt about that. I have to be honest.
Yeah,
but
so I said instead of shipping it to you, I thought we'd have it on a Greek island this summer. A Coke.
That sounds like a plan. It's totally a plan.
All right, buddy.
Okay, I really didn't have much doubt that we're going to at least tag 2,510 once we were breaking out from the correction.
Oh, Steve, here I'm going to pass you the chart so you can show them the S&P what you're talking about.
Sure. We had talked about it since we were breaking out of this descending channel here, that this was a very, very, very characteristically bullish correction because it was a perfect ABC. So, you know, I was expecting new highs since then, if you remember, Dale, and, you know, my targets were 2,510, which proved that it had some kind of a value because it created this little bull flag. And now it's this level. So, you know, we also have the confluence. We had this ascending channel. This is a little overthrow. I also have another quality target here. It's more of an Elliott wave target. So the question is, what happens up here? I mean, I like it. This is what we were looking for. But let's see it play out. My risk tolerance is going to be, you know, I'm going to give it the ability to test this ascending channel as well. So I would say that, you know, this is maximum, let's say, around 20 handles. And, you know, my first target is definitely going to be down here, which is the breakout level. So it's, call it, let's say, 2,485. So that's my first target. So it's, I would say, roughly like a 2-to-1 risk reward. And let's see what happens from there. But I do like it, and you know, it's the plan I had in mind. So no matter what happens, no regrets. I think it's overstretched. I think it's overbought in the short term. I think that the market, there's no question that the market is extremely complacent. We ignore anything that's negative, and you know, we keep rallying on promises for tax reform, which we don't even know if it's going to pass, or etc., etc., etc. Or you know, positive expectations. But I already believe that you know, on the short term there is not many things we can expect, you know, to provide an extra push before at least we see some move lower. But all that's in theory. Let's see what happens now in action from this point on.
All right, Steve. Well, hey, I think it was a good pickup, and I'm going to get ready for my trading day. So you guys. Okay,
Blake, enjoy, mate.
You guys have a great one. Thanks.
Good hunting, Blake.
Bye-bye.
Thank you. Good luck.
Okay, so I think we covered this. Now, having to do with the rest, nothing has changed in my positions. I'm still short the Aussie, I'm still short the Kiwi, I'm still short the Euro, I'm still long the pound, USD. This is the only position that I currently have that's out of the money. I'm still long the USD ZAR. And you know, we are definitely seeing a pullback in the DXY. We can also see it here. Yesterday we had a candle that's more or less an indecision candle, this like spinning top. Today we're moving lower once again, so we might retest the 93 level. And to be honest, I wouldn't be paying much attention to what happens from this point on until Friday, because you know, it's some position squaring, etc., etc., etc. But you know, I'm really looking forward to see what's going to happen after the NFPs. If the NFPs are going to overperform the expectations, which are already watered down, I think that should provide the fuel for the dollar to actually extend higher towards 94, 94.20. This is the area I mostly care about, because you know, this is going to be the ultimate confirmation for me that you know, this slow reversal started with a descending wedge and an inverted head and shoulders, and then finally breaking above, you know, the first area of resistance, which was 93, that it's something more than a correction, because until then we really have no basis to be highly confident that that's the case. You know, we were just seeing some signs, and we kept following them. Now, you know, the ultimate test is now in a couple of days from now. You know, we're going to have a much better idea what's happening from this point on. So let me go through some questions, and Adding more euro yen. Okay, Lucas still likes euro yen shorts. Let's have a look at the euro yen. Obviously, okay, yeah, the euro yen is still consolidating in what still doesn't seem like a bullish consolidation, rather the opposite. And it's
I kind
about
of
also
am looking for, Steve, what I'm hoping for. You know how Blake says sometimes, you know, where he would look to do something. I would love to see one more pop above 33 towards 320, and I'd be all over it with stops over the high. If the NFP provides that action at 320, that's, you know, that's
that can happen as well. There's no question about that. Can happen.
That's what I'd like to see.
And give us something like that. But regardless, I'm you know, I'm pretty much convinced that this price action is very difficult to just provide a push to new highs. I mean, you know, the chances of at least one more leg lower are very high, in my opinion.
Yeah, just so looking for a C, ABC off, you know,
at the very least, at the very least. So I'm really on board with Luca on that. I mean, that's how I see it as well. Luca also says October strongest month of the year for Aussie statistically. Yeah, Luca, you know something, you know, on one hand, I pay attention to this kind of seasonality because the seasonality I care mostly about is I pay very much attention if a pair makes a big reversal at the beginning of a month, then I know that there is a strong possibility that the month is going to be starting, you know, on the right foot, as we say, or the opposite, or when we see a market top at the beginning of a year or bottom, etc., etc., etc. Now, having to do with seasonality, I mean, this year, for example, a lot of people were trying to short pick the stock indices because, seasonally speaking, for example, August, September are not considered like very good months. And we also have the adage, sell in May and go away, etc., etc., etc. But still, I mean, we have record low volatility in, you know, for October, even the first few days, etc., etc., etc. And the indices still keep moving higher. I mean, seasonality in the sense what usually happens when, you know, has a point, but, you know, I'd rather look at the chart and make a decision for that year. But I hear you, mate. I hear you. I mean, yeah, it is an element. Aussie not moving with risk now, but with yuan and gold. Yes, I would agree with you. It's not very strongly correlated with it lately, and you know that's why if you remember, I never mentioned a possibility of risk off as a factor of going short the Aussie. Although I do think that if we get some serious risk off, and I'm not talking about a couple of days of turmoil or whatever else, I do believe that both the Aussie and the Kiwi, just because of market reflexes, they are going to take the downside. But I also don't believe that in the short term, and you know, when we just have some negative days, the Aussie is gonna, you know, move lower just because of that. Arif, thanks, Blake. NFP relevant, all on Fed nominee now. Yeah, I agree with you, Luca. The market, I think, is focused a lot on that. It depends because we have a variety of candidates. We have a couple that are quite hawkish actually, and Stelios discussed about it yesterday. We're not really sure how the market is going to take the appointment of a hawkish candidate because, you know, on one sense, logic says that okay, that's a dollar positive influence, but on the other hand, somebody that is hawkish poses more risks to the economy, because I don't think there is much doubt that a huge part of the economic recovery was in fact based on the very, very loose monetary policy decisions. So, you know, we have to see about that. Biggest move, Cascari or Powell, then DXI to 88. Yeah, there is absolutely, you know, there is absolutely a chance that we're still going to see a new low. Actually, Grega is also expecting a new low, and you know, it's always a possibility. it's always a possibility below 93, but we need to go below 93 to even talk about that. Until then, you know, we have had a nice rebound, and you know, we need to see what's going to happen. I was writing to the chat room before that I'm actually thinking of squaring some of my positions, because I'm mostly long the dollar at the moment, and you know, on average I have decent profits. So I think ahead of the NFPs I'm going to do something. We're going to see what's going to happen. I'm not probably going to leave all the risk on the table. I mean, there's no point, since I already have some profits. Can we trade on stock which is 52-week high? Yes. But what do you mean exactly, Amit? I mean, you mean if you should go long a stock that is at 52-week high? Generally, you know, stocks that are 52 weeks highs are obviously, you know, some kind of overbought, but on the other hand, it's a proof that they're actually doing something right. I mean, I wouldn't suggest you outright buy something at a market so frothy like this just because it's banging the door on the highs, because in the short term, obviously you have very high chances of finding yourself in profit, but it has to do with how you manage it afterwards, and it's always about reward to risk. So if you give me a specific stock, we can have a look at the chart, but otherwise, you know, it's very general for me to give you answers. Hello, would appreciate the latest the crude oil, Brent, Euro Aussie, Pound Aussie, Euro Swiss. Okay, that's a big list. Let's have a look at them. So first of all, let's look at the Euro and the Pound crosses, because more people are asking about them as well. So Euro Aussie, simply put, nothing to do here. It's still within a triangle. The major resistance zone is below 151. So, you know, it looks like it wants to move higher, but unless we get a daily close above 151, there's absolutely no confirmation, and until then we remain in a choppy range. So the only thing I have to say about this is that you need to remain more patient. On the other hand, Euro Kiwi is making an attempt of breaking above the this corrective channel. It's not doing it in a fast pace, so it's not really inspiring. But you know, I can't deny the fact that you know, this might just accelerate and push to new highs. I'm also medium term, you know, bullish on this. So you know, quite likely, I'm not going to be taking a position here at the moment, because I'm not enthusiastic about it. I see better opportunities, but you know, both of them I think have higher probabilities of moving higher, but they don't seem really ready to do it immediately. Pound Aussie, on the other hand, gave us, like, you can say, the double top, but if you go down to a 4-hour chart, it was an ascending wedge, so it has broken below it. For the bull trend to remain strong, it's really critical to hold the 167 support. As long as we do that, I think that there is no doubt that you know, this break of the descending channel was a bullish development. So you know, also I'm medium-term bullish, but I wouldn't be buying it, you know, right here, right now. Pound Kiwi looks better than the Pound Aussie, simply because this is a triangle. So this seems to be like a bullish consolidation. It will likely bring another push towards the 189 area, which is extremely critical, because a break above there leaves all this that is between the blue lines, let's call it like this huge triangle, like a very, very big bottoming formation. So, you know, this is something I'm very closely monitoring, because I would really love to be long the Pound Kiwi above, just below 190 actually. Okay, so let's call it 190 to have a round number. So that answers some of your questions. Let me see what's the rest you asked for. Okay, let's have a look at crude, and let's have a look at the. Okay, crude got rejected from 150 from 53. Unfortunately, I didn't manage to get involved with that, because I was away when it entered my area. But You know, I really liked the rejection from there. Now we.
Yeah, you know, the dog. I was going to do it too, but the dog ate my chart.
Yeah, I know.
My dog ate it, and then the wind blew it away.
I know.
I used to say that to my teachers. Oh, where's your homework, Dale? Oh,
But
my dog.
honestly, I remember it was. I remember, you know, kids obviously have like very low imagination. I can't even count the times that, especially when I was in elementary school, somebody had claimed that their dog ate their homework, and they was like, "Oh, come on, honestly, what the hell?"
Great to have a dog, man.
Yeah, I mean, come on, everybody had a dog, and every single dog was targeting at homeworks. It's like they put their homework in the sauce. So I don't know.
Yeah, in the bowl.
Yeah.
Yeah.
So I really laughed with that. Actually, I remember. I will never forget that the last time I heard somebody use that as an excuse, I was actually in high school, and I almost cried. And you know, on the other hand, you have to think of the following. Let's say, you know, from the 1 million people that claim that happened, one of them is telling the truth. But how the hell are you gonna? Let's honestly say that my dog ate my homework. I would never be able to go to the teacher and say, "Listen, dog ate my homework."
Oh, my son.
I would rather say, you know, I didn't do it. Yeah, sorry, you know, I was lazy yesterday. I didn't do it. Listen, we were testing at major area here. We still are. If we hold from this point on and we get a rebound to 51.5, I would really like to get, I said that yesterday as well, I would really like to get involved so I can see at least one more leg lower towards 48.5, 49. So having to do with crude, I would be selling any strength towards 51.5. Okay, and let's have a look at the Euro Swiss as well, which was the last one you asked for. Euro Swiss is not in a rush to go anywhere, but it is holding after getting this, you know, risk-off reversal that we got there. It's holding very nicely at previous resistance that is now looking like acting very nicely as.
I like that, Pat. One more high for a 3. I like it.
Yeah. So you know, from here, obviously, the potential is. I mean, there is a higher potential for an upside. You know, the risk reward is well defined. Is probably here. So I think this is an interesting place to look for longs. If we don't get some big risk-off event, I mean, it should keep moving higher. So it is Indian stock. Will not see on your screen. Yeah, you're right about that. Long as an investor based on fundamentals. It's an Indian stock. Okay, so you know, I can't help you out with that. I haven't even seen. I know that the Indian stock market is the Nifty, and I'm not actually. I mean, you never know. Come on, let's have a look at the. I think it's the Nifty, right? Yep. Okay. Yeah, the Nifty. No surprise there. The Nifty is frothy as well here, but I can tell you one thing for sure. You have absolutely no reason to want to be short as long as we hold above this area. Okay, this is a very, very nice, well-defined support. So I would use that as a guide for looking, you know, for longs or shorts. On the other hand, because, you know, I just to give you know both facts. On the other hand, if I just draw this line, you'll understand what I mean. What does this tell you?
Yeah.
Momentum loss, right?
Yeah. You see it on the RSI too at the last time. Yes.
So, you know, positive, you know, very, very, very strong support is holding. And this, like an ABC, an irregular one, might prove to be enough to give the Nifty another lift higher with more momentum. But
it's
on
like
the short,
25% in a year here, man. 25%.
yeah. It's insane. I mean, let's actually calculate it. By the way, you remember what we've said, Dale, right? Look at when Nifty actually bottomed, 26th December.
Yeah, right around the Trump, right. Yeah, one more low after the election.
26th of December. I mean, it's the seasonality we've talked about many, many times. Things bottoming or topping at the very, very end or at the very, very beginning of a season. If that's a month, if that's a year or whatever, okay?
Right,
that's also a bullish element for the Nifty, okay? So let's see what it has done until then, since then, sorry.
It is pretty good. If you took that advice, you got rich.
29% to the highs. To the current levels, it's 26%. I mean, come on, it's obviously it remains bullish. Would I be long?
And that's after they went to a cashless economic system with no shocks. Tell me there's no shocks there. I can't believe it.
They had some monetary shock there.
People were committing suicide there because they couldn't get money for their college or anything. I mean, it was a mess. I don't know what it's like now, but when Modi pulled that, a lot of his citizens were under extreme duress.
Yeah, and you know something? I think it was an experiment on a global scale as well. I mean,
I do too. Yeah.
I do believe it.
A test case on the largest democracy population-wise in the world.
That's absolutely true. Very true. So this is what I see in the Nifty. So yeah, the Nifty is looking very nicely on one hand, but I can't disregard the momentum loss that we've had here. And if you're asking me if I would buy an index that has already moved 26% higher with by October, probably I wouldn't. But you might be looking at a stock that is actually very interesting, for example, or that its chart looks even better than the Nifty. So if you send me a chart, I will gladly do for you some technical analysis on it. My pleasure. Technical analysis is the same anyhow, regardless of if you know the instrument or not. Personally, I prefer to not trade only on technical analysis and to have the background and the macros and the fundamentals and everything else. But that doesn't mean that technical analysis on its own doesn't work. Okay, use this R. Okay, USDZAR is also showing, after yesterday's a little bit of exhaustion, short term might give us another pushback towards 1340, but the break above the triangle still remains a fact. We also confirmed the higher high from this and this high, so it still looks good. It still looks good. I'm still long. DX hit good support at 93.115, says Ben. Could be the catalyst of some bullish continuation. That might be the case. Definitely the general 93 area is very important. Treat Euro longs carefully into the weekend. Catalonia to proclaim independence on Monday. May see large Sunday gaps. I agree with you, Luca. Personally, although Blake spoke specifically about it, Blake spoke specifically about the inability of Euro to accelerate lower, being a proof that it remains strong, and I have absolutely no counter argument to that. But personally, I'm still short the Euro, and personally, I still don't feel like it's a time to be long. So I do see that. Technically, we don't have an impulsive move lower yet. I mean, nobody can doubt that. But I don't think I'm ready to be long, or that the market is yet ready to be long. Of course, if we get something terrible having to do with technicals, we'll see. Or NFPs, missing by a lot, or whatever, obviously, but then it's going to be a dollar story mostly and not a Euro story. Okay, can we take a look at the Russell? Sure, another parabolic market actually. There it is. And the parabolic move just, keeps on giving. there's nothing to say about the Russell. I mean, the Russell is obviously in an impulsive move. I mean, nobody can doubt that. When you get such a steep ascending channel, and then you manage to actually overshoot it, penetrate through it, and start trading in a even more steep channel, because if I draw, a channel from there and there, you'll see that it's like almost vertical. I mean, what can somebody say about this move? This is an impulsive parabolic move. At some point, it's going to have some big pullback. There's no question about it. Just look at it. Just look at it. 12% higher in 30 trading days. But there's nothing to say about that. I can tell you one thing, is that I have a target. The 161.8 is also approaching here. It's a little bit higher at 151. This is the IWM to be very exact. Okay, so some kind of a reaction from there, and I'm pretty sure that if somebody shorts here, they should find themselves in the money at least at some point, because this kind of a parabolic move cannot expand much more. But would they be shorting it now? No, I wouldn't. I mean, this is simply a crazy move. I'd rather be short the SPX that shows a lot less momentum and a much slower move. RSI is at almost 86, by the way, here. I mean, I think that we should get a move lower, maximum from that 161.8 to at least retest this broken blue channel.
But the Nasdaq's a weak sister. Why not short the Nasdaq?
The Nasdaq is also, at a very critical juncture here, since you mentioned it, Dale, because a break above this makes this like a flat top bullish triangle. On the other hand, a failure and a break below this makes this a topping formation.
Yeah, I'm just saying the Dow, the S&Ps, the Russell have all, blown to new highs by quite a wide margin, and this has been the weak sister.
Yeah, it has been lately the weak sister, and we've seen times and times again, last week, etc., why that has been the case, because simply some of the FANG stocks have broken.
Yeah,
technically speaking.
Amazon's still sitting on a neckline. Yeah.
James is making fun of what we were saying about the teachers, etc. UJ failure to hold breakout may kickstart a huge move down, says Luca. Listen, Luca, I agree with you, because I was, but we're not there yet. I have to say, first of all, but I agree with you on the sense that I was watching this trend line. We still haven't managed to break above it, and I showed the other day the 4-hour chart, but it doesn't matter anymore, because now it is quite clear on the daily as well. As you see here, the USD yen is more or less now showing us what Nasdaq is. So a break below there is bearish. A break above there is probably targeting 116, but in the 4-hour chart it doesn't look good at the moment on the short term. Okay, but still I think the NFPs is going to be the catalyst. So a very, very weak NFP print will provide the catalyst for an acceleration lower. That might also take with it risk, etc., 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 and that might provide even more fuel. On the other hand, the market has set the bar very low due to the typhoon, etc., etc. So who knows? I mean, even statistically speaking, NFPs are very unreliable, the first print. If for some reason we get like a big print, everything might break higher. Palladium getting close to a buy zone. Yep. Let's have a look at it. Yeah, it is. I mean, it has been testing the support resistance area. I said when we were up there that, I see the possibility of another move lower, but for that to happen, we do need to clear this 905 area. Okay. If and when that happens, I believe it's going to be ready to expand once more lower. But if this level holds, then it can really push to new high. So this is a very, very critical area, between 900 and 9.5. If we don't hold this, probably, we're extending lower at least once again. So that's it with palladium. Oh, we have a chart as well. Let's see. From Jess. Let's see what Jess is watching.
I see you, Corbin.
This can't be palladium.
What is that?
For some reason, it doesn't even say. Something is bugged here, I'm guessing, because it doesn't even say what kind of an instrument this is.
What is it?
But
Maybe it's a crypto maybe.
No, just look at the scale here. It's like 0 point something to 2. So yeah. Probably you sent me the wrong chart. This looks more to be like a ratio of some kind.
Like a penny stock.
Oh no! Now he sent me another one. So probably that was some kind of a ratio, I'm guessing. Let's see. Yeah, there it is. Oh yeah, this is a longer term chart. So yeah, this confirms what I told you, that it's likely to see another move lower towards here. Yeah, very likely, very likely. But for the time being, if we break below the area I talked about, I agree with you. We should come back and retest this area, definitely. If we're going to move higher from there, we're going to see. But definitely there is, there are serious levels of support lower, which if we find, I'm guessing this is a monthly chart. I'm guessing. Okay. So yes, I agree with you. Okay. One last thing. Oli has asked me, from the chat room, to talk about confirmation. When do you get confirmation that something is happening? And I told him, that I'm going to talk about it because, this is a topic that's of interest, for many people and many traders.
I got it the same night as my baptism confirmation. How about you?
I can tell you a story about baptizing my son, but it's going to take long another time. So, yeah, when do you get confirmation about something? Because he sent me a chart about the cable and, told me, what did I do something wrong here or whatever? Listen, the answer about confirmation is, to begin with, is not easy, because in order for you to get confirmation about something, the very first foundations, the very first element of getting confirmation that something is happening or isn't happening, is to have a strong bias of when something is turning from bearish to bullish or vice versa, or when some kind of a level is, extremely important. So to begin with, you need to have good technical analysis to be able to recognize the support resistance areas and the areas that matter for the market, or for example, the indicators that matter for the market, because some market reacts better, let's say, to some moving averages, some other market to other moving averages or whatever. Personally, I'm not using moving averages so much like that. I'm using them for other reasons, but I know that people successfully use them. So after that happens, so for example, in the example of cable, okay, I was looking at this area since a long time ago, for support. First of all, the fact that we're getting some kind of a rebound from here, for me, is an initial confirmation that this area was indeed of importance. Now, for example, when I would get confirmation that this is going to be a bullish continuation, the answer is simple: is once I see, for example, an initial reaction, is as long as I don't reverse and go below it once again. But confirmation also has to do with your risk tolerance, because, for example, it's different to be seeking confirmation as a scalper that you're looking for 2-3 pips of stop loss, because in this case, confirmation is very, very easy to determine. And it's different to talk about confirmation when you're looking at longer term trades, because in this case, your risk tolerance is different. And you know, it has to do, as I told you, with determining the areas that validate or invalidate your technical thesis. So, you know, this is how you seek confirmation, by first trading on what you have a strong bias on. So, for example, when you see a market that you have a strong bias about which are the important levels and which are the important patterns, you know, seeing them play according to your plan is the confirmation you need. And that's why you shouldn't, anybody shouldn't, nobody should trade on a chart that you don't feel confident that you understand what it's doing at that moment. Okay.
Great.
So thank you, Dale.
Nice mentoring, buddy. And thank you.
I'm doing my best.
Thank you for hanging out. So you can learn a lot from Steve every day. And you know, we record our whole sessions. They're great teaching tools. If you're trying to learn and hone your skills, go to our YouTube page. And if you're new, I encourage you to take a subscription and invest in your future trading performance. And now I'm going to welcome Corbin to our community. Corbin, I'm making you the presenter. Corbin Kodirla. And Corbin's a teacher, a mentor, a trader. Looking forward to having a conversation with you, buddy. So how are you?
Very good, very good. How are you? Thank you very much for having me.
Nice to hear you. Yeah, nice to hear your voice again, buddy. It's been what, a couple of years at least?
1.5 roundabout, yeah.
Yeah. So what's been happening in your trading life in the last couple of years? I know that you started marketing your FX Master course. How's that been going?
It's been going well. I suppose the target audience are people who take a step back and want to look at the bigger picture and are looking for ways that the market will pay you, which was the core concept of the course. And I think it's what's really interesting is if you look since last November, since the elections, or even if you look since 2009, I mean, equity markets have had a phenomenal run, to say the least. And what's really remarkable is that the number of people who are calling for correction is just increasing by the day. The number of tweets you see on the VIX reaching all-time lows and how that bodes badly for the market is also increasing. And you know what? I believe at some point there will be a correction, because there always is. But my bet, my money is that the day that where everybody throws their towel in and says, I can't take this pain of being short anymore, that's when it's going to happen. And right now there's just too many.
How are you going to know that? How are you going to know? Because I want to know too. How are you going to know we've reached max pain? Is there a number on the market? Is there a number?
When you stop seeing people tweeting about it, when everybody says screw it, let's just go long. I mean,
okay. Look, well, I think it's today.
4,000.
How about that? I think it's today that you're going to start to see a correction. So call me Dale's crying wolf again. But we have some interesting numbers here. So it looks like we're looking at the bond chart right here. Is that correct?
Yeah, no, that's true. I wasn't going to start out with that, but it just happened to be up here.
Oh, okay.
If you want a chart here, see if you can recognize this. Well, I suppose it's already labeled in the chart. This is not. That's the wrong. It's certainly the same.
Okay.
Kind of the wrong asset class.
So we're going to play. Guess.
Check.
So what is this at 77 cents?
No,
I don't know.
This is the stock index in Brazil.
Oh, okay. I never would have guessed.
So it's up. I mean, MEX is doing the same thing. DAX just is doing the same thing.
India we showed earlier.
So
all the emerging markets have outperformed the U.S. Is that the point?
No, the point is even dollar Brazil. So Brazil is appreciating a phenomenal character at the moment. What I'm saying to you is all markets, doesn't matter if you're in Botswana, Alaska, Mexico, New York City, London, it is going up.
Global.
it's a global phenomenon, and this is what's really, really exciting. Everything is breaking up. It's not just disconcerted like it was in the last 10 years. It is going up, and I just, for the last 2 years, I've been saying S&P is going to go to 4,000, and it's definitely going to get there. And I think
what's going to 1,000?
The S&P will be getting to 4,000 very soon.
4,000.
Over the next 1 or 2 years.
Yeah, I've seen 4,200 by Peter Temple with one interruption, but he's pretty good. So yeah, that's an interesting number, 4,200. So you're a proponent of the narrative of a synchronized global recovery.
Yes, and can I offer you a catalyst? No, not necessarily. I can offer you lots of stories. But what I'm saying is that there is a trend, and do you want to be in front of it, or do you want to go with the wave? I think you definitely want to go with the wave.
Okay. So what do you do here?
Well, so this is an interesting question. Let's take a step back and think about, what is it that people tend to look at when they look at the markets. And so a lot of people, the first information they see is this visual representation of price bars. I mean, remember, this ability to chart prices is just a very recent phenomenon. When people back in the 80s or 70s were sitting in front of quotrons or market makers had to quote the clients, all they saw were just, price flashes on the screen. So I think there's a big difference.
I had charts, but I had to update them by hand.
Exactly. So I think, one thing that's happening is that this visual overload allows the brain to try to see a lot of things that sometimes might not necessarily be there. Number one. Number two, time is incredibly important to investors. And I feel that not enough people give time the importance it has. And I'll tell you that the number one factor you realize that time is so important is that boredom and restlessness usually leads people to overtrade, which is the single most or the second most biggest cause for people to lose, the first one being over leverage. And so what you get when you look at these charts is a visual representation with time completely squeezed, because obviously a year doesn't just go as fast as you might think by just looking at a chart. So when you look at a chart, especially over the period of a year, you think, oh my God, there's been a lot of action. When you actually sit in front of the screen during the day, this thing is not moving, it's not budging. So I think when you trade, you need to take a step back, you need to actually visualize or try to represent what is actually going in which direction, and maybe come up with a reason that's valid enough that you feel confident about. And once you have that, you need to construct a portfolio, because trading one asset isn't going to do you a lot. It's interesting, a lot of people say, I'm going to day trade, but I'm going to live this kind of free lifestyle of empowering myself. So I'm not quite sure how it is you're going to empower yourself if you're going to sit in front of the screen for 10 hours a day and sweat bullets. So the whole point is take a step back, use the right kind of leverage, construct a portfolio that represents your view. And so
less is more. Less is more, right?
Oh, absolutely. I mean, if you can end up having a portfolio where you rebalance once a month or maybe once every 2 weeks, trust me, you're living in bliss. You're living in paradise. And so the message here is, if you're going to look at any of the markets and try to find some sort of narrative that's going on here, it's, yes, global recovery. The equity markets are certainly indicating it for whatever reason. Okay, central banks might be piling money in, and we might now come to a halt because they're going to stop or start to decrease their balance sheet, and maybe Yellen's going to go out and the hawk's going to come in, and God knows what's going to happen tomorrow. But today you're getting a clear signal globally. So forget about what's going to happen in the next 24 hours. But today you're getting a very clear signal about what the market wants to do. And what the market wants to do is sell bonds, buy equities, be short the dollar, and in any case, be long commodities. So, okay, so you have that vision of the world. So maybe you're not quite sure. So dig around a bit, find some reliable sources that kind of corroborate the numbers. And by that, I mean, look at some economic indicators. What's the PMI doing? Are manufacturers on the up? What's inflation doing? Because inflation tends to be, inflation goes up, you're screwed because everybody's going to raise interest rates. And so that seems to be under control. Just, have a look for what economically is going on around you, and then construct a portfolio that expresses that, and preferably with instruments that are not going to require you to maintain them like a pet. I mean, it's great if you have a view on a single stock, but they don't call the Russell 3000 for nothing, because it's got 3,000 stocks. So which one are you going to choose? You're going to go with FANG, you're going to go with utilities, you're going to do cyclicals, non-cyclicals. I mean, God knows what you're going to do. So all you really have to do is either buy the Russell 2000, which as we just saw is going up, 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 or you buy the S&P. And similarly with bonds, I mean, bonds are wonderful instruments because they just, you know, it's the gift that keeps on giving. Not only do they roll down the yield curve, but you also get paid coupons. And so ultimately, go out and buy a bond index. And nowadays with ETFs, people have wrapped and allow you to track anything under the sun. So, you know, in the States, you've got the AG and you've got the SHY and the TLT and whatever else you can find on the bond stuff. So buy yourself a couple of bonds, get some equity under the belt, look at some commodity ETFs, maybe you want to put a momentum overlay on top of it, and go short the dollar index and, you know, live happily ever after. So what I'm really trying to get across here is a global view of what's going to go on.
Do you put these on all at once, Corvin, or do you kind of leg into constructing a portfolio? Here I am. I'm a new client of yours. I'm taking your course. I'm flat. I have 100 grand. What do you do? Yeah,
so, okay, so the core concept of the course is to actually go statistical, meaning everything you do has to be tested. And so the interesting thing is what we just discussed here is that you construct a worldview, and that's a very heuristic approach. So what's a better way of creating a portfolio so that you can actually replicate the process historically? So one way to do that is to base it off easily available economic data as well as price action. By price action, I'm talking about basic momentum or mean reversion stuff like, you know, how far has it overextended? And then the real question comes down to how volatile is the asset and how much does it correlate to the other assets? I mean, the whole point about buying a portfolio is that, let's say, so why would you want to buy bonds if you have equities? Well, the reason is because, you know, if equities do go belly up, the bonds are going to be there to capture you. It's about the hedging benefit between these two assets that you're acquiring. So the first thing to do is to actually get a grip on how do you measure the volatility and then how do you measure the hedging benefits of the relative assets. And then the next question, which is the really important question, is to ask yourself these two things. Number one, how much are you willing to lose? And from my experience, having run a fund and having asked this question hundreds, if not thousands of times of investors, whatever you believe you're willing to lose, divide or multiply that or divide that number by 2. So if you're coming to me, you say, I've got, you know, $20,000 to invest and I'm willing to lose maybe 2,000 over the next 12 months, I can guarantee you by the time you're losing $500 or $1,000, you're going to be a nervous wreck. So once you know how much you want to lose or can lose and where your hard stop is on your portfolio, just, you know, use the statistics about the assets you have to construct a portfolio that stays within those boundaries. And that's
well, you know, I understand the rationale, but I also believe that this would be a very difficult time with a lot of asset prices pretty stretched, even though the trend is up, to say to new money what to do in here. So, you know, I'll ask the question again.
This is a wonderful thing. I just love what you say in terms of asset prices are stretched, and it's very difficult to say the new money to get into here. So this is what I call a puke trade. This trade makes you want to vomit. And you know what? The best trades are the puke trades. It's the trades that you're just so scared to go in, but everything is pointing in that direction that that's the only thing you should definitely do. And the reason it's called the puke trade is because, trust me, everybody's still so scared that by the time that they just see the train running away from them, they're just all going to pile in. So let me actually bring up a chart of the S&P here, because we heard the word parabolic before, and parabolic has actually a very important meaning in terms of market dynamics and market crashes that follow. So this thing does not look like a parabola. It's been churning like crazy. What looked like a parabola was the NASDAQ in '99. That was a parabola, and then it went belly up shortly after. This thing is grinding. You don't crash when you grind. So what's happening at the moment is a lot of people are just sitting on the sidelines, and they just think, oh my God, I'm missing out, and you know what's happening, and Trump definitely will come through with his tax stuff, and you know the world isn't that bad a place, and yeah, maybe they slapped a couple of people around in Spain and shot a couple of people in Vegas, but you know what? The world continues. So maybe I should pile in. And by the time everybody thinks that, that's when you should get scared, because guess what? If everybody's buying, then they don't have anybody to buy from, and then the only thing left to do is to sell. So that's why, you know what, in terms of indicator, when this thing is going to crash, count the number of tweets every day that talk about a correction. When that number goes to 0, your S&P will correct. Until then,
what's it averaging now? Are you tracking that?
No, it just came to my mind. I'm going to start tracking that. Over the last year or so, I've become really obsessed with Python, which is a wonderful programming language which allows you to connect around about anything on this planet. So I'm building up the tool set. One of the ideas was to look at sentiment, but I think, what I just said actually probably will be really, really interesting in terms of a counter indicator, because you always want to do what everybody doesn't want to do. You always want to be in the minority. I mean, being a good trader means playing the minority game. You always want to be on the opposite side of what everybody else is thinking.
Even the commercials?
Commercials tend to, hedge. Commercials tend to be opposite anyway, because from their perspective, they just want to lock in.
Your volume went soft.
Speculators that you want to follow, and it never has been clear to me that this commitment of trade. Can you hear me?
Yeah, I can now again. Thank you, Grover.
Hey, I don't know.
I could hear you.
I can't hear you. Can you hear me?
I could hear you. Yes.
Hey, can you hear me now?
Yes.
Oh, I suppose I couldn't hear you. Sorry about that. So no, what I'm saying is the commitment of traders report is really interesting, but I've never managed to squeeze any sort of statistically relevant relationship between price action and between what what those things tell you. I mean, the other one is it's very difficult to work on levels, because as you can definitely see, it's always the relative kind of price or levels between these commitment of trader reports that are relevant or not.
Okay. All right, so we want to be in the minority. The narrative is this is not parabolic yet. It's on.
Does it look parabolic to you in any sort of way?
Is this a daily?
Yeah.
I think if you go to a longer term chart, it looks a little bit more parabolic. If you go to a weekly or a monthly. Yeah, that kind of does.
Okay. Well, see,
that kind of looks like it's that, if you draw a parabola, you could call that a parabola.
I could also call it a straight line, which is, this is, I suppose, the wonderful thing about markets. Two people can look at it and see something completely different. That's why you'll always have buyers and sellers.
Okay. That's my opinion. And on a monthly, it would even look more parabolic. But what do I know? I'm just a blind squirrel in the middle of a snow-covered forest on a moonless night, wearing my shades, trying to find a few nuts.
That's true for all of us, including myself. You're absolutely right.
Okay. So how are you positioned with where markets are now? Say you were flat, what would you be doing in here?
Okay, so I focus on currencies, and so I wanted to go through some currency ideas. And again,
that'd be great.
The notion of what does it mean to have a long-term perspective. So first of all, let's start out with
being bearish the dollar is part of your narrative.
Being bearish the dollar is part of the narrative at the moment. That's sort of two facts here at the moment. One is momentum. The other one is that you have a rebalancing in terms of what people perceive as value in the currency market, as well as not necessarily the most clear of signals out of the States as to what they're doing with interest rates. I mean, interest rates are not always about, looking in the past and what has happened to interest rates, but about people's expectations as to what will happen in the future. And there is uncertainty around that. And that's, I think, why, what we saw was phenomenal dollar rally at the start of the year. And then all of a sudden the steam just left the boat, the wind went out of the sails, and the thing just started to trail off. Actually, the dollar index had a phenomenal sell-off over the last 6-7 months, and it doesn't look like it's necessarily going to ease off. But let's take a step back here. So if you look at currencies, what is it? What are the underlying factors here you can focus on? So obviously, currency is the exchange of two pieces of cash, one for the other. So for instance, if you live in England or you live in Euroland and you want to go to the States, you have to take your euro bill and you have to exchange it for a dollar. So the question here is, can you associate a notion of value to these bills, to these pieces of paper? And the answer to that is yes, you can. How? Well, imagine this. Imagine that you have a bottle of water. So let's say you're in New York City. You have a bottle of water, and you're going, you're a tourist, you're in London, and you're thirsty, and you went to this newsstand, and you bought yourself an Evian bottle of water, nice and round and beautiful, and you put it in your pocket, and you come back to JFK Airport, and you just realize, hey, I wasn't thirsty, I haven't drunk that bottle of water. So you carry it around with you, and then you come across another newsstand where there's another bottle of water, which is exactly identical, but it's selling for $1, not the pound that you spent. So if you're going to exchange one bottle of water for another, one good, one piece of product that has intrinsic value, the exchange rate you're implying is 1 for 1, $1 for £1. But then you're looking at the market and you're seeing that actually the dollar is not going for £1, and it's like now at 132 or 133. So there's something misvalued here. The market is giving a particular price to the currency, but in the real world, there's another price. And so this is what people are referring to when the currency is overall undervalued. They're looking at the kind of exchange rate you could get in the physical marketplace when you exchange goods. So the next question you want to ask yourself is there a way of capturing this measure or this intrinsic value of currency when I exchange goods? And the standard measure for that is the purchasing power parity, which is PPP, and it's published by a whole bunch of international institutions like the OECD or the IMF or the World Bank. And you can go on there and you can look at these PPP rates, and you can, from those rates, determine which currencies are undervalued, overvalued. And so if you look at the kind of space that people usually tend to trade in the currency space, euro at the moment still is one of the most undervalued currencies on a PPP basis. And to a certain extent, Trump was right when he accused Merkel of, you know what, you're keeping this currency artificially low to benefit Germany. Maybe she's not necessarily consciously doing it. I'm not going to make any implications here, but it definitely is undervalued, which is giving Europe a massive benefit. And so to a certain extent, you have to counter that. I mean, at some point, the market is going to realize that, because you can't have a free lunch forever, and it's going to rectify.
Maybe you shouldn't have named Merkel, and maybe you should have named Draghi instead of Merkel.
What do you mean?
I think Draghi has a little more influence on the value of the euro than Merkel does, don't you?
Oh, in terms of the interest rates he sets. Yeah,
well,
yeah.
Okay, the value of the euro.
The value of the euro. I mean, yes.
Compared to Merkel.
I'm talking about the headlines that hit earlier this year,
okay.
when Trump actually directly accused Merkel.
Well, yeah. Okay, maybe he was right about one thing.
Maybe. So, in any case, what you saw is, of course, in the last 6, 7, 8 months, the euro did definitely have a massive updraft.
Yeah.
The question is, what do you want to trade it? What's the most overvalued? So if euro is undervalued and has to go up, what's the most overvalued currency? And it's interesting in this particular case, in terms of overvalued, what naturally comes up is the Swiss franc, and there's been many structural reasons, such as safe haven inflows, as well as the depegging that went on, and then the natural rebound from that kind of situation. But the Swiss franc is still overvalued. So natural position would be Euro Swiss, a long-term position. So I've got here a chart of Euro Swiss long-term, that this is on a weekly basis. So let me zoom in, and so that we can see exactly what's been going on since the last year. So this is since October 2015, and there's definitely been an updraft, a tremendous performance on this thing from 1.06 all the way up to 1.16, which is 6-7% over the last 1.5 years. Obviously, you trade this on your usual kind of leverage that people trade, which is 30-40% return. So that's pretty interesting kind of idea. Now the question is, will this continue? I'm not a forecaster, I don't have a crystal ball, but the conditions are still there. If you are more interested from a technical perspective, what is interesting is, of course, you've had that massive gap when the SMB pulled the plug from under the currency. The carpet from under the currency. Swiss just appreciated like crazy on that particular day, and we remember the horror stories from the back of that. But the gap hasn't closed yet, and there is anecdotal evidence that gaps do tend to want to close, and this thing is definitely going for it. And we know that you are strong, so you might want to think about scaling into a position, especially after the current pullback that you're experiencing. So if you go onto a daily kind of time horizon, you see that it's definitely finding support here. So now listen to the words I'm using, because this is quite interesting. I started out from what's the economics, what's the underlying fundamental story, and I'm now transitioning to where do I see the market turning. And what you'll see with many people who will talk to you about fundamentals, they will, when it comes down to the real short term about entering positions, talk to you about fundamentals, about support and resistance. And there's a reason for that. And the reason is macro trends tend to be things that develop over a period of 1 or 2 years. So to get the timing right is very difficult. And if you get the timing wrong and you're trading on leverage, it doesn't matter how right you think you are, and you might be in the long run, in the short term, you still might get squeezed. So at this moment in time, Euro Swiss definitely looks like a very interesting situation, certainly across a whole bunch of other outlooks indicators. Swiss franc at the moment seems to be weak. Seeming to be weak, let's move over from this idea of value to a slightly more technical idea of mean reversion in currencies. And you certainly have mean reversion in a lot of asset classes. So if you go back to equities, the equity market is really interesting because it's got some phenomenal bias. I mean, look, it's been going up since 2009. But remember one thing, equity markets have been going up for 500 years. I mean, this going up thing that people have to get into their heads. It's not a recent phenomenon. I mean, the people who are looking at the markets now obviously haven't been around from 82 to 2000 because that thing just did one thing and it went up. Even 87, it was the end of the day. Tudor Jones said it's going to be the end of civilization. You know, we're going to be back with clubs, living on the trees, eating coconuts. None of that happened. It was just a straight line up, continued to be a straight line up. Equities go up. It's usually the crash that's the exception, and we don't get crashes every Tuesday. So I think the message here is that if you're looking for biases, another big bias. We get turnaround Tuesdays. Another big bias in the equity markets is mean reversion. So what that means is that if something's been going up for a long time, you tend to find that it will stop doing that. And so a great time horizon is a 5-year period. Every 5 or so years, something that's gone up ridiculously high will correct. Now, interestingly enough, that's not just true for equities. It tends to be true for a lot of other assets, including currencies, and especially currencies, because currencies tend to be naturally mean reverting as well. I mean, when was the last time you saw currency go from 10 to 100 like Yahoo did back in the 90s? These things don't go explosive unless they're emerging markets.
Bitcoin.
So, oh God, yes, great, Bitcoin. Look, it has. Okay, let's get to
has you stuttering. Even has you stuttering.
It's kind of sad because I have no view on it. I mean, at this moment, the thing is, I can't. I always. This is really interesting. So my son actually calls me old. I don't feel old. But I think I'm getting to the stage of being old, and that means getting sort of old school. If I can't touch this thing, if I can't smell it, and bounce it around, it's not real. So this Bitcoin thing, I don't know. I mean, I can bounce a computer around if you want me to do that, but I don't know. It's difficult to say. Am I going to agree with Goldman Sachs or Jamie Dimon? I mean, Jamie Dimon thinks it's a lie and it's a fraud, and on the other hand, Goldman Sachs wants to set up and start looking at how to make Bitcoin real for them and their clients.
Yeah, and Jamie Dimon's traders traded in London, and he didn't fire them either. So, you know, that's Jamie Dimon.
Hey, that's investment backing for you. So going back to mean reversion, what you can ask yourself is, so which currencies were overextended? And so you can measure overextension in a very simple way. Just take your favorite currency pair and look by how much it moved over the last 5 years. And then what you do is, the currencies that appreciated the most you sell, and in this case I'm going to say versus the dollar, but you can say versus whatever base currency you choose, and the currencies that depreciated the most you buy. So in this particular case, it's Swiss yen. So as we saw, Swiss yen appreciate, you know, crazily and still is overvalued, but the yen is still fairly weak compared to the rest. And so this is actually a weekly chart of Swiss yen, and at the moment, Swiss yen, definitely, it's been a fantastic trade ever since it came up, which was back at the end of 2015 as being short Swiss yen. And I think there's still juice. And as I said, okay, so you have a view in terms of this thing should now, because it's so overextended, sell off at some point. And so when do you want to enter? And that's where the technicals come in. And, you know, yeah, I do say if you can't repeat and test, you shouldn't use. But given we're not here looking to test anything, we're just trying to do heuristics and we're trying to get comfort. Is there something that we can do? And support resistance, I think, is always a wonderful story to have, because it definitely represents levels where investors want to get in or not. And so what you see on this particular chart is the fact that you do have a triangle, and we know that triangles means congestion, volatility is getting scrunched. And that means at some point it wants to move in a particular direction, at least initially. So which way is it going to go? And the bias tends to be to the downside, and the fact that it's on the upper edge of this triangle, it just gives you confidence on a weekly chart. And so when you go down to the daily, you see, well, hang on, I'm having a lower high than I did before. It's looking weak. You know, this might be something to go for. And then I look at dollar Swiss, and I see that dollar Swiss has strength, and I see that Swiss is actually weak against a whole bunch of other currencies. So that gives me confidence. Hey, maybe Swiss yen is something to be looked at. Of course, it comes down to, okay, so if I go short Swiss yen, what's kind of my stop here? And that again goes down to, well, how much are you willing to lose, and that'll inform how much capital you have, and that'll inform you how loose or how tight you want to keep your stops. But the reason you tend to stop, think about
your stop is based upon a money stop rather than a market stop.
Well, a money stop has to translate into a market stop, because you can't just go in, okay, I have $20,000 in my bank. I'm not willing to lose more than 1,000, but guess what? I'm going to leverage up and have a billion Swiss yen short. Yeah, that thing moves by a fifth of your history.
Yeah.
So where would you want to put your stop? I mean, again, let's go with what the market is telling you in terms of how much it decided to explore the space around it, which is what support resistance ultimately tells you. It's about how willing it is to get there. And at the moment, it's not being very willing to, let's say, go above this particular level. Now, is this a level that's set in stone? No, you can't forecast it. And that's the whole problem with trading. Trading is about making decisions under uncertainty. It's like you're fighting a constant battle. You've got bullets whizzing around your head. And the only thing you can know that you should do and can do is protect yourself. So wear a bulletproof vest, wear a helmet. I mean, if you're going to go trading without a bulletproof vest and a helmet, you're begging to be stuffed. And so the whole point, therefore, is if that's what you believe your hard line is for you, then stick to it. Set the stop there. Tell yourself, I don't want to lose more than that, and then go for the trade. And again, let's be very realistic, because it's all about how much are you willing to lose. If you think you're willing to lose X amount, divide it by 2. Why? Because you're probably going to have other positions on the line. And the other reason is most people lie to themselves. All investors I've seen who told me I'm willing to lose 10% a year, they were liars. After 2 or 3% loss, which, hey, you know, happens almost all the time, because that's what it means to trade. It means to take losses. These people are on the phone to you, and you think, well, how old are you? Do you know what this game is about? Go away. So be nice to yourself. Be actually realistic in terms of what you want to lose, and then set yourself a stop. Don't use a lot of leverage, because you don't need to, especially in currency markets. And then you can sleep at night. You can forget about the position, and you can look at it maybe once a week and say, you know what, this is working out for me.
Okay. So anything you want to wrap it with, buddy?
Wow. Okay, so we're wrapping it already.
Okay. Well, you know, if you have more, it's fine. Usually I go a half an hour or so, but go ahead, man.
Okay,
you could,
I think an interesting one is, let's look at the upcoming news. I think a really interesting story is Aussie dollar. Aussie dollar against whatever currency you want to choose, and we'll have 2 of them. One is more against the dollar, because that's the classic story at the moment. The reason I'm saying Aussie dollar is because, pardon?
And the other one's against Kiwi.
Yes, and the other one is against Kiwi, and the reason for that is because they tend to be neighbors. Right. And so that tends to be quite a nice mean reversion setup that you can actually milk for a lot of money if you have the patience to do so. In terms of Aussie dollar, we've got the retail sales numbers coming out tonight, depending which time zone you are. And certainly, most recently, if you actually look at what's been happening to inflation, so there's this wonderful website, Trading Economics. I don't have anything to do with it, and certainly the subscription fee is through the ceiling if you want to get the actual download data to be able to extract it. But you can do some nice plots, and you can see what's been happening to inflation to Aussie. It's certainly been squeezed lower, with currently it's floating at probably 1.9, and interest rates are topping out as well. And obviously, you're getting a lot of stories, if you look online, about how the fact that the housing market is completely overstretched. If anybody has to pay another 100 Aussie dollars on their mortgage, they're more or less going to go to the soup kitchen. And certainly on the ground, over the last year or so, having spoken to people in Australia, it is a catastrophe. The suicide rate in the mining sector is through the ceiling, because these people over-borrowed. Now they can't pay their mortgages back. It is, in Australia, it is a tough story at the moment. And so that's ultimately going to be reflected in the currency, because it's overstretched. And so retail sales, these kinds of, you know, it's like death by 1,000 needles. The thing wants to go up, but it just doesn't know how to. It's like a dog with 3 legs. It knows where it wants to go, but it can't get there. And so if we bring up a chart of Aussie dollar, this is to a certain extent what you're seeing. Let me get rid of these hours, which just plot out daily highs and lows. Actually, let me not get rid of them because it's difficult. But as you see, it's been on a downdraft. It's trying to get up, but it's very weak. It's come to the resistance. And I think any kind of news at the moment that's coming, it's going to hit it. It's going to slap it. And so you just find that, have a short bias on this thing, and then, try to hit it at the right time and go with the flow. I mean, the bias is ultimately to the downside, especially because you have strong dollar recovery economically, whichever way you look at it. Actually thinking about this, another great story with the Aussie is to be long, for instance, sterling against the Aussie. Why? Cable Aussie has massively sold off, especially after the Brexit and after the general elections. But there's something interesting going on with sterling, and that is, people don't want to believe that England is going to turn into Botswana. I mean, just because they're going to leave the European Union doesn't mean they're going to be eating bananas for the rest of their lives. And so that, to a certain extent, is being reflected in the fact that there is, again, strength coming into that currency. We've seen 133 as far as 135. Haven't seen that in a long time, certainly not after the collapse. If you look at sterling Aussie here, it's certainly based out and it wants to go higher. And as Aussie's going to sell off, sterling will go higher, sterling Aussie will go higher as well. So I think those two currency pairs are something to bear in mind. And what's interesting in terms of confirming that kind of Aussie weakness is this chart, Aussie Kiwi. Again, this is on weeklies. As you can always see, I pull up a weekly chart because I want to see the big picture. And what you can see over the last 3 years, which is this area over here, this thing has been going up, down, up, down, up, down, up, down. I mean, 3 years is a long time for something to go up, down. You gain confidence that it is an up, down kind of a thing. And so at this moment in time, one way to look at it is to want to go short this particular currency. Not because you necessarily have a view on Kiwi, but because you're taking a view on the behavioral pattern that this currency pair exhibits.
Okay. Nice look. Yeah, huge long-term range. So
I mean,
you have a negative bias. You think we could revisit a buck and take out the bottom of the range?
No, absolutely, absolutely. Now, this is certainly on a weekly basis, on a daily basis. So let's zoom out here. So again, you're going to try to understand, hey, what's my risks here? So if I enter Aussie Kiwi here at 109, how far can I go? How far am I comfortable to go? Am I going to let it go to 114? Is that too far? Is that going to counter all the signals? Or am I happy to let it go to 112 and then see it go back down to 1? So there's a lot of different things you have to think about. Remember, the entries are not the most important thing. Nobody's going to make money on entries. They're going to make money on exits. And so that's ultimately what you have to play. You have to play it safe. You have to wear a bulletproof vest. And you have to have some sort of view you're comfortable with. And then you have to put your stops in the ground.
Thank you, buddy. Very interesting presentation. You want to show your website and how people could follow you?
Yeah. Let me just type this in. This thing in over here. That's okay. So let's take this out. So this is the website. So the website focuses on content. There's no ads. There's no buying opportunities here. It's me publishing. Actually, the last year was a bit crazy personally for me, so I haven't had that much time to publish. And I've just started a new article series last week, which there's been a big uptake from my subscribers currently, and it's about this idea of how do you build consistently profitable trading systems, what you have to measure. And as you can hear from what I said today, I started out with equities, and then I'm going to extend it to all the other asset classes out there. And the question is, how can an individual ultimately build up a portfolio of various asset classes and make money? And by making money, here's going back to time. Time is of the essence because we don't have much of it. So when people say I want to make money, it's not about I want to make money over the next 1,000 years. It's also having to be realistic. I can't make $1 billion in the next 10 minutes. So there's got to be some space here. So an interesting question to ask yourself, and a lot of people don't ask that question, is over what time frame would I like to double my money? A time frame that seems realistic, doable, and is certainly within my means. And the biggest issue is a lot of people say, well, I'd like to get 20% a month consistently, day in, day out, and I'm going to day trade. Well, good luck to you because it's not going to happen. The way to do this is to look at what markets have historically been providing you. And so when I say markets have been going up, actually, let me go into this article that came out last week, and I'm going to show you a nice chart, which I completely plagiarized from somebody else because I didn't do that research myself. And I'm going to show you what more or less happened to, actually, it's not in last week's article, I think. It's in this week's article. what happened to equity markets over the last 500 years, because I did mention that, equity markets have been going up for 500 years. And I find that's always a very interesting statement, because the first question you ask yourself is, well, the S&P wasn't around 500 years ago, so how do I do this? Well, guess what? People have been trading equities for a long time. Remember the tulip thing? Well, that's been going on, and certainly the Italians had it, because the Italians were business people back then. So if you actually plot out an amalgamated kind of chart of what happened to the equity markets the last 500 years, this is what it is. Yes, you get ups and downs, and you get crashes and blah, 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 but it's going up. And so once you understand the bias that a market can offer you, you have to ask yourself, how do I protect myself against the downdraft? And that's where the kind of entire construction business comes in that we were talking about earlier, and this is what this article series will explore.
That looks parabolic.
Yeah. It certainly does at that scale. You're absolutely right.
And what do you think? A little parabolic? Maybe we're due, let's see, fib in time, 500 a year bull market. We get a 38% correction in time. That would be, we're about due for a 200-year pullback. Can you imagine? Hey, here's another pullback. I don't have to worry about it. How about you?
Well, here's another pullback. We haven't had a comet strike the Earth in 65 million years, and we're bound to have one because it happens in 5 million years.
Yeah, we'll be lucky enough to see it, huh, buddy? And it was really, really pleasure hearing your voice and hearing your, your rationale and holistic approach to the markets, and your view that you don't have to be a market timer, but just recognize undervaluation, overvaluation, mean reversion. A lot of pearls you dropped on us today, Corbin. Thank you very much.
Thank you very much for having me on, and sorry for sort of rat-a-tatting at you at the moment. I haven't had much sleep in the last 48 hours.
All right, buddy. Well, rest well, and may pips rain down on you and your subscribers in the coming days.
Thank you very much for your time. Have a very good day.
All right. That's my trading warrior brother, Corbin Cordilla. So thank you very much, Corbin. See you face tomorrow, day before NFP. Don't just count your pips, count your blessings. Enjoy the rest of the day. And ForexAnalytix will be back with you and have your back tomorrow morning. Adios.